Top 25 FP&A Interview Questions and Answers. In the competitive field of financial planning and analysis, FP&A, preparing for interviews requires a solid understanding of key concepts and practical applications. This video presents the top 25 interview questions that candidates may encounter. We will also provide insightful answers to help you articulate your skills and experiences effectively. By reviewing these questions, you can enhance your readiness and confidence for your upcoming FP&A interviews. 1. What is your experience with financial planning and analysis? My experience with financial planning and analysis, FP&A, spans over 5 years in various industries, where I developed and managed comprehensive financial models. I have led budgeting and forecasting processes, utilizing statistical analysis to inform projections. Collaborating closely with cross-functional teams, I streamlined reporting processes and improved accuracy in financial reports. My proficiency in tools like Excel and Tableau allowed me to analyze complex data sets effectively, providing actionable insights that supported strategic decision-making and enhanced overall financial performance. 2. How do you approach budgeting and forecasting? In my approach to budgeting and forecasting, I prioritize collaboration with key stakeholders to ensure alignment with organizational goals. I start by analyzing historical data and current market trends to create realistic projections. Next, I establish a clear framework that includes defined assumptions and parameters for the budget. Regular reviews and updates are essential, allowing for adjustments as circumstances change. I also emphasize transparency in the process, keeping communication open with all departments involved. This ensures that everyone has a clear understanding of financial expectations and can contribute effectively. 3. Can you explain the key components of a financial model? A financial model typically consists of several key components that work together to project a company's financial performance. These include assumptions, which outline the basis for projections, income statement, detailing revenues and expenses, balance sheet, reflecting assets, liabilities, and equity, and cash flow statement, showing cash inflows and outflows. Additionally, sensitivity analysis assesses how changes in assumptions affect outcomes. A well-structured financial model enables stakeholders to make informed decisions based on various scenarios and financial forecasts. 4. How do you ensure accuracy in your financial reports? Ensuring accuracy in financial reports involves several key steps. First, I implement a robust review process that includes cross-checking calculations and verifying data sources. Regular reconciliation of accounts is crucial to identify discrepancies early. I also utilize automated tools for data entry to minimize human error. Additionally, I stay updated on accounting standards and regulations to ensure compliance. Collaboration with team members for peer reviews enhances the reliability of our reports. This multifaceted approach helps maintain high standards of accuracy and integrity in financial reporting. 5. What tools or software are you proficient in for FP&A? In my experience with FP&A, I have gained proficiency in several tools and software essential for financial analysis and reporting. I am skilled in Excel for its powerful data manipulation and modeling capabilities. Additionally, I have used financial planning software such as Adaptive Insights and Anaplan, which streamline budgeting and forecasting processes. I am also familiar with ERP systems like SAP and Oracle for integrating financial data across departments. Lastly, I utilize business intelligence tools like Tableau and Power BI to create visualizations that enhance data presentation and decision-making. 6. How do you handle variance analysis? Variance analysis involves comparing actual financial performance against budgeted figures. I begin by identifying significant variances and categorizing them into favorable or unfavorable. Next, I analyze the underlying causes by collaborating with relevant departments, which helps in understanding the factors influencing the variances. I then prepare a detailed report that outlines these findings and suggests actionable steps to address any negative variances. This process not only aids in corrective measures but also enhances future budgeting accuracy, aligning financial strategies with business objectives. 7. Describe a time you improved a financial process. In my previous role, I identified inefficiencies in the monthly closing process that delayed reporting. I initiated a review of the existing procedures and collaborated with team members to gather input. By implementing a standardized checklist and automating data consolidation using Excel macros, we reduced closing time by 30%. This improvement not only enhanced accuracy but also allowed the finance team to focus on analysis rather than data gathering. As a result, we delivered timely reports, enabling better decision-making for management. 8. How do you communicate financial insights to non-financial stakeholders? Effectively communicating financial insights to non-financial stakeholders involves simplifying complex data into relatable concepts. Utilizing visual aids like charts and graphs can enhance understanding. It's essential to focus on the implications of financial results rather than just numbers, highlighting how they impact the business. Tailoring the message to the audience's background and interests fosters engagement. Encouraging questions creates an interactive dialogue, ensuring clarity and alignment on financial strategies and goals. This approach builds trust and facilitates informed decision-making across the organization. 9. What metrics do you track to assess business performance? In assessing business performance, I typically track key metrics such as revenue growth, profit margins, return on investment, ROI, and cash flow. Additionally, I monitor customer acquisition costs and customer lifetime value to evaluate marketing effectiveness. Operational efficiency can be gauged through metrics like inventory turnover and employee productivity. Lastly, I keep an eye on Net Promoter Score, NPS, to understand customer satisfaction and loyalty. These metrics collectively provide insights into financial health and operational success, allowing for informed decision-making and strategic planning. 10. How do you prioritize tasks when working on multiple projects? When managing multiple projects, I begin by assessing the urgency and importance of each task. I use a priority matrix to categorize tasks based on deadlines, impact on business objectives, and resource availability. Communication with stakeholders is crucial. I regularly check in to align priorities and adjust timelines as needed. Leveraging project management tools helps in tracking progress and reallocating resources efficiently. By breaking down larger tasks into manageable components, I maintain focus and ensure timely delivery without compromising quality. Regular reviews allow for flexibility in adapting to changing priorities. 11. Can you walk us through a financial forecast you prepared? In my previous role, I developed a financial forecast for the upcoming fiscal year. I started by gathering historical data, analyzing trends, and identifying key drivers impacting revenue and expenses. Collaborating with various departments, I incorporated their insights on projected sales and operational costs. I utilized a dynamic financial model that allowed for different scenarios, adjusting inputs based on market conditions. After thorough validation, I presented the forecast to senior management, highlighting key assumptions and potential risks, which guided strategic decisions for resource allocation. 12. How do you stay updated on industry trends and regulations? Staying updated on industry trends and regulations involves a multifaceted approach. I regularly read financial publications, industry reports, and regulatory announcements to keep abreast of changes. Engaging in professional networks and attending webinars or conferences allows me to gain insights from peers and experts. I also subscribe to newsletters and join relevant online forums. This continuous learning mindset ensures that I can adapt to changes promptly and apply best practices in financial planning and analysis. 13. What is your approach to scenario analysis? My approach to scenario analysis involves identifying key variables that can impact financial outcomes. I start by gathering historical data and current trends to establish a baseline. Then, I define various scenarios, best case, worst case, and most likely case, based on potential changes in market conditions or business operations. After modeling these scenarios, I analyze their effects on financial metrics such as revenue, expenses, and cash flow. This helps in understanding risks and opportunities, enabling informed decision-making and strategic planning. Collaboration with stakeholders is essential to ensure alignment and accuracy in assumptions used. 14. How do you collaborate with other departments for FP&A activities? Collaboration with other departments for FP&A activities is essential for comprehensive financial analysis. I start by establishing clear communication channels with teams such as sales, marketing, and operations. Regular meetings and updates help ensure alignment on financial goals and strategies. I involve departmental leaders in budgeting and forecasting processes, soliciting their input and insights. This collaborative approach not only enhances data accuracy but also fosters a shared understanding of financial objectives across the organization, enabling us to make informed decisions that drive growth. 15. Describe a time you identified a cost-saving opportunity. Identifying a cost-saving opportunity occurred during a quarterly review of departmental expenses. I noticed that our office supply costs had increased significantly over the past few months. After conducting a detailed analysis, I discovered that multiple departments were ordering supplies independently, leading to higher prices. I proposed a centralized procurement process, negotiating bulk purchasing agreements with suppliers. This change reduced costs by 15% annually, streamlined ordering processes, and improved inventory management. The initiative not only saved money but also fostered collaboration between departments. 16. How do you handle tight deadlines for financial reporting? Handling tight deadlines for financial reporting requires a structured approach. First, prioritization is essential. I assess the most critical reports and allocate resources accordingly. Effective communication with team members ensures everyone is aligned and aware of their responsibilities. I also leverage financial software tools for efficiency, automating repetitive tasks where possible. If needed, I seek assistance from colleagues to distribute the workload. Staying organized and maintaining a focus on key deliverables helps me meet deadlines without compromising accuracy or quality in the reports I produce. 17. What challenges have you faced in FP&A and how did you overcome them? One significant challenge I faced in FP&A involved reconciling budget discrepancies across multiple departments. Different teams had varying assumptions, leading to conflicting figures. To overcome this, I initiated cross-departmental meetings where we could align our projections and share insights. I implemented a standardized template for budget submissions, ensuring consistency in data formats and assumptions. This collaborative approach not only resolved the discrepancies but also fostered stronger relationships among departments, enhancing our overall financial planning process. 18. How do you assess the financial health of a company? Assessing the financial health of a company involves analyzing various financial statements, including the balance sheet, income statement, and cash flow statement. Key metrics such as liquidity ratios, like current and quick ratios, profitability ratios, including gross margin and net profit margin, and solvency ratios, like debt to equity, provide insights into the company's ability to meet its short-term and long-term obligations. Additionally, trends in revenue and expenses, along with cash flow analysis, help gauge operational efficiency. Comparing these metrics against industry benchmarks can also indicate relative performance and financial stability. 19. Can you explain the difference between cash flow and profit? Cash flow refers to the net amount of cash being transferred in and out of a business, reflecting its liquidity and ability to meet short-term obligations. In contrast, profit is the difference between revenue and expenses, representing the financial gain over a specific period. Cash flow can be positive even if a company is not profitable due to non-cash expenses like depreciation or changes in working capital. Understanding both concepts is crucial for assessing a company's financial health, as strong cash flow can sustain operations even in times of low profitability. 20. How do you validate data before using it in financial analysis? Validating data before financial analysis involves several critical steps. First, I ensure the data source is reliable and accurate, checking for any discrepancies or errors. Next, I cross-reference the data with other trusted sources to confirm its consistency. I also perform logical checks, such as verifying that numbers align with expected trends or historical data. Using software tools, I run automated checks for anomalies. Finally, I document the validation process, which allows for transparency and ensures that any assumptions made are clearly outlined for future reference. 21. What role does FP&A play in strategic decision-making? Financial planning and analysis, FP&A, provides critical insights that drive strategic decision-making within an organization. It involves analyzing financial data, forecasting future performance, and identifying trends that inform long-term strategies. By evaluating various scenarios and their potential impacts on the business, FP&A helps executives make informed decisions regarding investments, resource allocation, and risk management. Additionally, FP&A supports alignment between financial goals and organizational objectives, enabling companies to respond effectively to market changes and capitalize on growth opportunities. 22. How do you present financial data to senior management? Presenting financial data to senior management involves clear communication and visual representation. Start with a concise executive summary that highlights key insights and trends. Use charts and graphs to illustrate data points, making complex information more digestible. Tailor your presentation to the audience's interests, focusing on metrics that align with strategic goals. Engage with stakeholders by providing context, addressing potential concerns, and inviting questions. Ensure your data is accurate and up-to-date, enhancing credibility and facilitating informed decision-making. 23. Describe a time your analysis influenced a business decision. In a previous role, I conducted a detailed profitability analysis of a product line that was underperforming. My analysis revealed that certain customer segments were not generating enough revenue to cover costs. I presented these findings, highlighting potential impacts on the bottom line, and recommended targeting more profitable segments. This insight led the management team to adjust their marketing strategy, reallocating resources to focus on high-margin customers. As a result, the product line saw a significant improvement in profitability within a few quarters, showcasing the value of data-driven decision-making. 24. How do you manage stakeholder expectations during budgeting? Managing stakeholder expectations during budgeting requires clear communication and transparency. First, I establish a framework for regular updates and open dialogue, allowing stakeholders to voice their concerns and priorities. I ensure they understand the budgeting process, including timelines, assumptions, and limitations. By setting realistic expectations, I can mitigate potential frustrations. Additionally, I involve key stakeholders in discussions to foster collaboration and align objectives. This approach not only builds trust but also ensures that all parties have a stake in the final budget, leading to smoother implementation and support. 25. What do you think are the key skills for success in FP&A? Success in FP&A requires a blend of analytical skills, financial acumen, and communication abilities. Strong analytical skills enable professionals to interpret complex data and identify trends that inform decision-making. Financial acumen ensures a deep understanding of financial statements and key performance indicators. Communication skills are essential for presenting insights effectively to stakeholders. Additionally, proficiency in financial modeling and forecasting, along with adaptability to changing business environments, enhances effectiveness in this role. Collaboration with various departments also plays a crucial role in achieving financial goals. In this video, we've explored the top 25 interview questions and answers for financial planning and analysis, FP&A, roles. Mastering these questions can significantly enhance your confidence and readiness for your next interview. Understanding the nuances of FP&A not only prepares you for potential challenges but also positions you as a strong candidate in a competitive job market. If you found this content helpful, please like this video and subscribe to our channel for more insights and tips to advance your career in finance. Thank you for watching.